All right. Thank you everyone for joining. Thank you, Rahul, for giving us your time. Um, some of you may know, we are Commonwealth Canada. We're also the same team that does UBI Works, and came to concepts of Commonwealth from some of the original sort of founding voices in the basic income community that recognize that inequality of income starts from inequality of property and explores what kind of property should be rightfully commonly owned, even in a fully capitalist system. And so that led to the creation of Commonwealth and exploring how the value of nature, of land, of minerals, of the air, these things, no one has really a claim on its value, but rather the productivity they can engender with it is something that capitalism is designed to foster efficient allocation. But the actual underlying value of the resource is a common inheritance of humanity. And across the whole world, there's no one I know who speaks as eloquently and as well researched about the role of minerals, of mining and ore as Rahul Basu. So it's really a pleasure to have him here. He's the research director of the Goa Foundation, an environmental nonprofit that advocates that minerals and natural resources be accounted for as a shared inheritance. And I'll let him further introduce himself when he begins. But so I think I got a little brief introduction to where Commonwealth itself came from, but some of our research to date, which is fairly landmark in Canada, is trying to quantify the actual value of our natural Commonwealth, coming to $241 billion annually of its economic rent, unearned income that could be used to pay dividends, as in the basic income, or reduce taxes in a progressive manner, or invest in public resources. So this is a number that we've quantified, and our future projects are looking at more in depth what could this look like on a provincial basis, on a municipal basis, to try to create some guidance and policy that could be practical for the political class. Because right now this paper is still quite at a visionary stage, since it's unlikely any country would just adopt this full through like in one step. But this shows what the potential is. So we are for a land value tax. We believe it's time to make the tough decisions, because a land value tax close to the full rental value of land would reduce the prices of homes by an average of 55%, reduce the value of land by an average of 75%, and would result in efficient use of land that would lead to more supply and address the biggest problems in our housing crisis today. The income from the land rent would not be a tax grab, it's a tax shift that could be used to reduce income taxes, or rebate people back, like the carbon rebate is rebated back to families from the carbon tax, and most people are better off. So, we think that is a kind of the only underlying solution for the housing crisis, upon which all other solutions would work better. Of course, we have a lot of other needs of change in the housing market, but if it's built on economic incentives that are driving an increase of pricing, because it's actually that actually benefits one group over another, we'll never find an end to this crisis. So we need to find a way to share in the underlying value that we haven't earned, and that's where the land value tax comes in. Our other area of research is the concept of a Commonwealth Fund. We've not broadly promoted this, but we have a deep dive sort of research article at commonwealth.ca/fund. This gets closer to what Rahul is going to talk about today. This is more of a deep literature review and an explanation of how we can create sovereign wealth funds, from what sources, basically like investment portfolios for everyone, which we already have. Canada has the Canada Pension Plan, which is world-renowned. We can also have that for everyone, not only for retirees, if we can find a way to harness our Commonwealth to seed the fund with money, so that everyone can benefit from our collective progress. So getting closer to what Rahul's going to talk about today, it's pretty incredible. He produced some research showing that we're on track to lose 77% of our mineral wealth to private extraction. That's equivalent to almost $24,000 per Canadian. That could go into a sovereign wealth fund that pays all future generations. Our great grandchildren could benefit from the resource extraction that we need to do today. So this is not against resource extraction. It's for rewarding mineral extraction based on their fair compensation, and whatever is attributable to the earth should become back to everyone equally. So Rahul's been quite a landmark in this research. So I'm super excited for this talk today. I'm going to introduce Rahul in a moment, and then we'll go into Q&A, or rather he'll begin in a moment. And just a reminder, we do have a way to add questions. There will be an interactive Q&A after his talk. And after that, we'll go to the floor for any questions you have submitted. And we usually will stay until they're all done. I have a hard stop myself at 10 today, but if there's more questions, maybe Rahul wants to stay. 10 Pacific, that is. So yeah, this is where you can find it. So thank you very much. Rahul, would you like to take the stage and share your screen if you have something to share?
Thank you, Floyd. Thank you, Ken. And thank you, all of you, for attending. And shout out to Commonwealth Canada and UBI Works. Both of those are dear to my heart, as you'll see. So just quickly, I have a background in economics and management and worked in the world of finance for many years, including the infamous Enron, where I got a chance to look at how upstream oil and gas is managed and handled. And then I moved to Goa and from Bombay. And when I was in Goa, I looked around and I sort of realized that there was a lot of misgovernance going on. And after thinking about it a lot, I realized it was probably because of the large amount of iron ore mining that was going on. And as a result, the political economy was that the miners basically bought the politicians bought the electorate. And after that, the politicians told civil society that, we are democratically elected and represent the will of the people. And who are you to ask for anything? So I joined hands with Goa Foundation, which is a very well-known environmental nonprofit here in Goa, but well-known across the country. And they've been around from 1986, and have been working on the issue of iron ore mining since 1992, as it was and is clearly our biggest environmental issue. Now, we got a good lucky break in 2012 when a commission of inquiry, I think you also have probably similar things, a commission of inquiry by the national government on the state of iron ore mining in Goa basically said that all mines were illegal, all laws were being broken, and there were pretty significant losses in the range of $6 billion, which is quite substantial for a small state. We went to the Supreme Court of India and asked for a permanent ban on mining. But the state government came back and said that, you can't stop mining because so many people are dependent and there'll be blood on the streets and it'll be on your heads. So anyway, in the course of the hearing, the Supreme Court said that, we've ruled in the past intergenerational equity is a part of our right to life. And in this instance, because we had raised the issue, they wanted to implement intergenerational equity. And the question was, how do we actually implement intergenerational equity with minerals? Now, we were really puzzled by this because we've heard of it, but getting down into specifics was a challenge. So we looked around the world, both at theory as well as best practices. And what it turns out is that it's a very simple idea. You need to make sure that future generations, your children and future generations, inherit at least as much as you inherited. And if you don't do that, basically, if each generation consumes a little bit of the inheritance, and eventually there's nothing left. And that's effectively what we're doing with the planet at the planetary scale right now. Okay, so that's the idea. But now what we actually do about it. So just to give an example that may resonate, imagine you inherit a bit of a family heirloom, some jewelry. Now, at least in India, culturally, it is understood that your inheritance of heirlooms have to pass on to the next generation. But now if it's something like gold, it generates no income and you're always worried about theft. You put it into a bank locker in a safe deposit vault and now you're paying money for it. So you decide to sell the gold, buy a piece of land. The children inherit the land and you get some income from the land, and that passes through generations. So this is intergenerational equity. So then the next question is, who has to implement intergenerational equity with minerals? So now we have to look at who is the owner of the minerals in India and in the state of Goa. Now, in a broad brush, if you start at the planetary level, there are a bunch of planetary commons. The deep sea minerals are in international waters are the big one in focus right now, but there are a whole variety of other commons like Antarctica, the moon, the Arctic, outer asteroids. All of these are planetary commons of certain kinds of minerals. But a large part of the planet has been given over to sovereignty of national states. And within national states, you can have either the nation, you can have subnational entities like Goa or the provinces in Canada. And in many places, including in India and Canada, you also have tribes of various kinds, indigenous people, First Nations, who also own within their territory rights to the minerals. And then, of course, you have a variety of private ownership structures, which are also there in both India and Canada, where you can have, corporates, Hudson Bay Company, you can have individuals who own the mineral in the ground. But in the case of Goa, it was very clear that the state of Goa was the mineral owner. So now the state of Goa had to ensure that, we had implemented intergenerational equity. So we decided to check whether this has happened in the past. So we took the annual reports of the single largest extractor, a company called Vedanta, over an 8-year period, and we scaled up their financial statements by their actual volume. They were about 1/3 of the volume of iron ore mining in the state of Goa. So we scaled it up for the entire state of Goa. And here's what we found. We found that over those 8 years, if we exported 170 worth of iron ore, I'm not getting into the actual rupee figures because that won't make any sense, but this is a normalized figure. If we sold 170 or exported, and the cost of extraction was 60, and we asked SESA Goa, because we are the mineral owners, if we asked SESA Goa to extract it, they would have charged us all the expenses plus they wanted a profit. So coming from the finance industry, I put a very high level of profit so that we don't have an argument with them later about the rate of profit is too low. So it works out that of 170, 60 would be the expenses, 10 would be the reasonable profit, an exaggerated reasonable profit. So the total cost of 70 and the value of the mineral in the ground before extraction would be worth 100. So this is what Floyd was talking about, the commonwealth of the people of Goa. Now this has been extracted and sold and gone. So what did the state of Goa receive in exchange for this mineral worth 100? Now ideally, they should have got 100 as owners, but it turns out that the state of Goa got just 5. In effect, we lost 95. And it just turns out that this is not unusual for, we've done this analysis now for many other parts of the world. You'll see in most countries across minerals over long periods of time, loss rates are pretty high. And except for the case of Botswana and possibly Norway and a few other countries where you have single-digit loss rates. In this particular case, I'm showing Canada of 75 because that's sort of a slightly different calculation from the 77, but it's more or less the same. But let's just think about the incentives of the system as it was working in Goa. Now, first, if you look at it from the point of view of the extractor, they're making a reasonable profit, plus they're getting minerals worth 100 for 5. So they're showing an enormous profit before tax, and part of it goes to the national government as income tax, but they still capture a huge amount of value. And they're very incentivized in two different ways. The first thing is they're incentivized to keep the political system working in the same manner, and they do this through lobbying, through political contributions, and sometimes through bribes. The other incentive is to try and extract as quickly as possible, because this is an extremely sweet deal. So what happens is anybody on the ground, environmentalists or anybody who, like even you, would be considered anti-development and anti-national because you're coming in the way of their enormous profits. Now let's look at it from the point of view of the politician into whose budget this 5 is being received. Now, traditionally, when you get royalty or what I call mineral sale proceeds, government treats this as revenue. Now, what do you think of when you hear the word revenue? Basically, it's like income, something you spend. So the politician says that, okay, we've got 5 from mining. Why don't we increase mining and we'll double it and we'll get 10? With that 10 now, I can reduce your taxes, increase your subsidies, build all kinds of grand infrastructure, uh, teach everybody, educate everybody. So the voter is also very happy. No, let's do that. But in effect, what's happening is whatever, even that 5 that's been received has been consumed, and that loss of 95 has become a loss of 190. So if you think about it in those terms, this loss of 95 is a loss of public wealth. It's a loss from the commons. It's a loss to all future generations, not just the 95, but even the 5, because even that's consumed. That loss of 95 is in effect a per head wealth tax. Now, Margaret Thatcher lost power when she tried to impose a per head tax in the UK. And per head taxes are considered the absolute politically worst kind of a tax. But in effect, what's happening is everybody is being taxed the same amount. And another way we can think about it is, we'll understand this better later, but we can think about it as a lost opportunity for a dividend, because that 95 and 5 could have been saved and you could have paid out a dividend from it, like we talked about with land and the dividend. Now, if you think about it just in terms of, we know about resource curse and all of this, but one way to think about it is we're consuming wealth. We're digging wealth out of the ground. A lot of it we're losing, and the remaining part we're just consuming. And this just gives you a sense of, you start with mineral wealth of 100. IMF estimated the best case is you lose 15%. Of that 85%, IMF's averages were 37% gets consumed, 18% goes into public investment, of which half is wasted. Financial assets like the Alberta Fund is about 30%. So the bottom line is that about 40% is passing on to future generations, 60% is lost. This is at the global level an estimate. And what we really want to do is to make sure that when we start with 100 of minerals, we end up with 100 of minerals. So how do we do this? We've come up with 5 simple principles. Principle number 1 is natural resources, including minerals, are owned by the state as a trustee on behalf of people and future generations. Principle number 2, since none of us have created the minerals, we must ensure that our children inherit either the minerals or its value. So now we have a choice. We can leave the minerals in the ground and our children will inherit the minerals just like we inherited the minerals because our ancestors did not extract the minerals. But if we do decide to extract the minerals, we must ensure zero loss. Whatever the worth of the minerals, if it's worth 100, we must get 100. Principle 4, we must save all that we get from selling this mineral wealth in a future generations fund, ideally invested in a bunch of vanguard funds, low-cost index funds invested across the world. And principle number 5, the real income from this fund should be distributed only as a citizen's dividend equally to everybody as a right of ownership. We get the dividend today. Our children will inherit the combination of minerals and the fund, and they will get the dividend in their turns. Now, this from an economic standpoint is actually superior to what's going on in multiple dimensions. First of all, capital is maintained, so this is sustainable. Second, we're actually saving much higher amounts in the total economy, so that will increase the growth. The fund as designed would would earn the global market rate of return. And we know from investment theory that individual investors find it hard to beat the market rate of return, let alone government investing on our behalf. The dividend, of course, is a universal basic income, and that has a bunch of economic effects. And if you don't know about it, please go to UBI Works and you'll see a lot about that. Now, if you look at the structure, what's happening is no money from mining is going into the budget. It's going into the fund being paid out as a dividend, which may be taxed after that. So the government now has to improve its taxation and also improve its public investment, because less money is going in and there's going to be more scrutiny because all of it is coming from taxes and not just simply by digging wealth out of the ground. And finally, because we're not allowing a few people to get rich through mining and everybody to get poorer, we're reducing the increase in inequality. And even the IMF agrees that a lower level of inequality is better from an economic growth standpoint. So our 5 principles from an economic standpoint are very clear and far better than what's going on. Now, if you think about it, and it's obviously fair, but if you think about it from a value standpoint, it completely in consonance with at least the Constitution of India. I'll discuss a little bit later about Canada. It also hits on a lot of values that most of us would hold dear. It's ethical, moral, just, fair, and right. It embodies the golden law of religion, because basically, do unto others as you would want to be done to yourself. If this had been implemented in Canada and Alberta, at the beginning of extraction, life would be a lot better for everybody. And it also deals with Rawls' sense of justice as fairness, as well as Amartya Sen's capability approach. Now, all this is good, but how does it deal with the issues that I raised at the beginning? How does it deal with the resource curse issues? The first and most important aspect of this is the dividend. And this connects back to the reason why nobody talks about the losses, because all across the world, most people think that minerals belong to the government and it's their problem. And we have some right to it, but it's not really that, we're not that closely connected to it. So the dividend is intended to create a link between the individual, their mineral inheritance, and their duty to the children. And the reason for the dividend, as opposed to trying to do good things with the money, is to make everybody an equal stakeholder, so we don't divide up the voters, and the politicians don't have an opportunity to say that this group will benefit and win the elections that way. Then zero loss puts pressure on the extractor and that whole crony capitalism kind of a complex that arises when there's great wealth at stake. And the fund and the dividend, by ensuring all the money doesn't go into the budget but comes out to the people, and thereafter taxes have to be raised and therefore questions will be asked, puts pressure on the politicians also. And from a technical perspective, it also deals with something called Dutch disease, exchange rate appreciation because of exports. It deals with the issue of budget volatility, because no money is going into the budget. Alberta has been suffering very badly from this. And it also deals with all the rent seeking, whether it's by the extractor, by workers who are working in the industry, all the corruption, patronage, because now everybody is focused on what's happening with my mineral wealth and is it being managed properly. Now, what have we actually achieved? In India's national mineral policy, we've got a statement which embodies our first 2 principles. Natural resources are a shared inheritance where the state is a trustee on behalf of the people to ensure future generations receive the benefit of the inheritance. It's a statement not really being implemented though. The principle 3, zero loss, there's also a statement, and I'll show you how that's gone into effect. In our litigation, the Supreme Court ordered the creation of a Goa Iron Ore Permanent Fund with a new levy of 10% of the value of the mineral. So this already exists, and it's, as far as we know, a global judicial precedent. The citizens' dividend, we are still demanding. The state government has not yet agreed to that. Let's see where that goes. Now, I'll be talking about the loss in Canada a little bit later, but it's a big issue. So what is needed to achieve zero loss? First of all, there needs to be recognition that there is a government that owns the minerals, as well as there needs to be some recognition that there is something called the public trust doctrine. The minerals are held in trust for the people and future generations. In the case of Canada, I don't see this except in the instance of First Nations and the Department of Natural Resources or Interior acting as a trustee on behalf of the First Nations. And the intergenerational equity principle also. Now, both of these two, the public trust doctrine and intergenerational equity principle, have been ruled to be part of right to life, but I haven't been able to find equivalent rulings in Canada. Now, zero loss now needs to become the goal of the mines minister. Classically, the mines minister is asked how much revenue have you got to the government, how many minerals have been extracted, and how much employment have you created. So instead of revenue to the government, we're asking for zero loss to be the goal. It's not good enough to get 5. You have to make that 95 of loss down to 0. And also, if you think about it from this perspective, the extractor is nothing but an outsourced wealth manager. They're converting our mineral wealth into money, which we will then go on to invest. So we are suggesting that the best practices from the outsourced wealth management industry needs to be put in place, including in the contracting phase, fit and proper person tests, so that somebody who's done illegal mining in one part of the world should be excluded from mining in any other part of the world, from managing mineral wealth. The high security mineral supply chain, as well as a bunch of safeguards are required. Now let's look at what happened in Goa after this. Now in India, because zero loss has become a requirement again under our constitution, we've had to now auction mineral blocks, and the auctions took place in the last couple of years. And the estimated value of the mineral reserves is 58,000. It's a Indian unit, rupees crores, but don't get stuck to that. 55,000 was the estimated value of the minerals, basically iron ore tons into market price. The royalty at 15% would be 8,000. The new levy would be another 5,500. But in the bids, the companies who won have bid for an additional 45,000 of these rupees crores. In other words, they basically said that for minerals worth 100, they're willing to pay 106 in exchange for that, plus they will have those expenses of 70 we talked about. Now, this, of course, makes no economic sense, but it's a market and people have bid this. So let's see what happens. But if you think about it, if we were getting earlier just the royalty, now with the additional amounts we're going to get, the implied loss rate is 86%. In effect, that if you had done the auctions way back when, we would have got we'd have got 14 instead of 14, we would have got 100. And but the other thing to note is that while only 10 of this Goa Iron Ore Permanent Fund is going to the budget, a good chunk is still going is being saved for future generations. A good chunk is still going to the budget, which is going to cause a lot of problems for Goa still, because we're not doing the fourth principle of saving everything. In terms of achieving zero loss, the future resource taxation was done recently by an organization based in Canada. IISD hosts the IGF, and this is a report that came out last year. It has a whole variety of other ideas of how to achieve zero loss. Now, let me quickly dive into the extended framework because this question comes up, what about the environment? What about the local community? What about all of them? And the way we think about it is that uh, while the mineral value is one inheritance, there are a bunch of other inheritances connected to the mineral. One part of it is the opportunity to earn income from the work of extraction. That's also an inheritance that depletes with the minerals. So the work of extract, you can extract the minerals only once. If you extract it today, your children cannot extract it and they will lose that opportunity. So how can you make the most of that? And there are things like, creating value addition, creating core competencies is the answer. The other part of it is the externalities. And the two big ones are the environment as well as the local community. Could be the First Nations, the people on the ground, and in other places it might be the local population. Now, with the environment, we're suggesting first implement the precautionary principle, which is basically identify no-go areas where your protected areas, put restrictions where you don't know what the technology is going to do. In Netherlands, which is a low-lying country, they extracted natural gas and the land has subsided further, and now they're getting earthquakes. You can put cumulative impact caps because in state of Goa we had 100 mines in a very small area, and each mine said we're not responsible for the damage, so you need to have cumulative caps, and you'd naturally apply environmental standards as would apply. So all of that would would limit the amount of extraction. Then you have the polluters pay for particular mines where you have avoid, restore, offset, and then last of all, you would compensate for the damage if there is any residual damage. With communities, you have a similar kind of a concept, but you would first have pre-prior informed consent. Then you would have the precautionary principle. Again, you would identify no-go areas. In India, we've had certain kinds of tribal indigenous people who said we don't want extraction. You would have restrictions. Again, in India, there are some places where we have uncontracted tribes. Obviously, we would not go and extract there. You would have cumulative impact caps also because you have a lot of in-migration, especially of males, leads to a lot of gender problems and prostitution. And then, of course, when land is sort of acquired and damaged, then you have things like, avoid, offset, you give them equivalent land because land is also an intergenerational asset. And finally, you have things like compensation. So with all of this, we believe that we achieve fairness in mining. The miners earn a reasonable profit. They enter, they get that reasonable profit, or if it's through an auction, it's up to them to decide what to bid. The mining workers are taken care of because we're not saying a permanent ban on mining like we had originally started with. The people who are impacted by mining, they're dealt with in terms of the whole structure I just explained. The state as the owner, in the case of Goa, has fulfilled its duty, though it's not getting any money into the budget. Its duty of intergenerational equity and the public trust doctrine. The people earn income via the citizens' dividend, and the children, of course, and future generations, their inheritance is safeguarded. So everybody gets their due. Nobody is very happy, extraordinarily happy, but that's when a good deal is struck. And of course, the environment, in the case of the environment, damage is sort of halted or reduced. Now, let me move on to Canada. In Canada, the desired legal provisions, of course, are government holding titles, and I think that's fairly clear. Large swathes of Canada are owned by the government at various levels. Intergenerational equity, you may need to advocate for this recognition of future generations and the whole principle of how it would be implemented. Similarly, public trust doctrine, there is no such thing, though it's a feature of common law in the UK, in the US, as well as in India. And then we use equality from the perspective of the dividend, as well as zero loss also can be argued from the point of equality, because if some people are benefiting where everybody else is losing, it defeats equality. Now, mineral ownership, I won't get into this very much, but basically you have federal, crown land, provincial ownership. The First Nations are important because their minerals are often held in trust, not always, and there's freehold ownership. And management is separate from ownership. And of course, provinces have a lot of power over minerals, so you may actually have to advocate at the provincial level. Now, here's the data which is in my in what I'd shown. This is the case of gold, and this is work done by the World Bank on the top 5 world gold producers. Canada, as you can see, is this orange line out here. This is the 80% loss rate. Lower is worse. And the best case for Canada in about a 27-year period, there were 3 years where we had less than an 80% loss rate. This is just in the case of gold. This is data from the World Bank. And this is data from Statistics Canada. The way this is calculated is slightly different from the way I did it. The way Statistics Canada looks at it is they look at all the minerals that are left, and they look at the way the royalty structures and are created, and they estimate how much will be lost in future, and they do a discounted value of that. Sort of, what is the value of all the future losses? And what is the split of this loss between what will the government get and what will, as owner, and what will the corporates and extractors get? And the latest figure in my report, of course, it's a quarterly figure that comes out, but I think it was somewhere in 2023, I looked at this. 77% was the estimated loss out of $1.24 trillion of minerals. The estimated loss was $956 billion, which was $24,000 per head, and invested, it would be a very, very large amount. And just this is the future loss. If you look at Alberta, and I'll show you some numbers, or I saw another figure where somebody said that $1 trillion have been extracted just from the Ring of Fire or from Sudbury in Ontario. So if this had been done in the past, you would be $1 trillion to the good, or maybe $2 or $3 trillion. Let me just quickly go into Alberta, a little bit deeper dive because there's better data on this. Alberta, 81% is owned by the government, by the state government, provincial government, 9% by the federal government, part of it in trust for future for First Nations, and about 9% also by individuals. Now, Alberta in many ways is quite similar to Norway. A similar amount of resource has been extracted. Resource rents also estimated, not in terms, this is the resource rents collected. Norway has done way better. Populations are also quite similar. But net, the study I took that from also said that per capita income and all of that was similar. But Norway is $1 trillion to the good. Alberta is just $17 billion. And that's what I was showing you in that slide from the IMF. You're consuming your wealth, so your per capita income looks good today, but eventually when the minerals stop, Norway will have $1 trillion and Alberta would not. But worse than that, while Alberta has $17 billion, Alberta has an estimated $40 to $70 billion of just environmental cleanup liabilities from wells which have been abandoned. There are various studies showing that there are big losses, and these two recent studies by the Fraser Institute in 2021 have a very good sort of analysis of Alberta, showing how the yellow line is the income to what they call the revenue to the budget. Very volatile, makes it very hard to deal with. If you treat this, what they call revenue, if you exclude it from the budget, then Alberta has been running a deficit pretty much every year. And they look at, if Alberta had saved, like Alaska did, 25% of what they got from minerals, Alberta would today have nearly a $250 billion fund. And this is just 25%. If it saved everything like Norway did, it would be $1 trillion to the good. And if Alberta then paid out a dividend of just half of the real income, not the full amount, it would be getting $2,000. So if we double that, it would be getting $4,000 from 25%. If the whole structure had been implemented today, each person in Alberta would be getting $16,000 a year. Now, a bunch of these ideas have been suggested actually by prominent business entities in Alberta. The Institute of Chartered Accountants proposed a sustainability fund. The Chambers of Commerce has been proposing greater saving more royalties, as well as the Fraser Institute is pretty famous worldwide in minerals. So you got a lot of support. And as I explained, you can get it's economically superior, and most people in civil society will support this because it's obviously better while mining can continue. But there'll be few people who would oppose it. But most importantly, even if somebody doesn't care about the environment or human rights in some far off place, they can see that even somebody in the capital city will say that, yeah, mining will continue, but it's just going to be done in a better way. There are some common objections from the left. Typically, we want equity over equality, public investments of higher returns. There are good reasons not to do this, but the most important is if you don't protect the dividend, you will not be able to protect either the fund or the minerals, and all of it will be blown up eventually. And which politician would implement it? And there are a variety of political scenarios in which this could be implemented. And of course, across the world, commons exist, mutuals exist, cooperatives. All of these are different kinds of, sort of common action. And there are a number of kinds of situations where you might find the politician who says, okay, let's do this. Peter Laflead in Alberta did have the right idea, but didn't have this full structure worked out. So I think it is possible for this to happen. And finally, let me leave this here. Some of the things we've learned. Shared inheritance is crucial in the way you explain it. Minerals are typically considered windfall revenue, and that is a very bad way of framing it. Future generations must come before the present generation. You have to always talk about mineral sale proceeds, because the moment you talk about revenue or tax or income or benefits, you start getting into the idea of let's spend it. We talk about the amount we lose, not about the amount we capture. We don't say we got 5, we say we lost 95. Because even if you say you got 90, it looks good, but when you say that you lost 10, it looks pretty bad. So you put pressure on getting to zero loss. Saving everything and sharing only through a dividend are crucial, because anything less than 100%, then you start negotiating and you quickly get whittled down from 99, you'll get whittled down to 0. You can see that again in Alberta, where you're supposed to save 30, it became 15, has become 0. And even if the income or the money has to be routed through the budget, but you want to pay a dividend, it has to be at the top of the waterfall, because otherwise everybody will be clamoring for their favorite sort of cause. And then, sort of this common dividend would be right at the bottom and would be pushed out of the budget. So even if you're thinking about a universal basic income, without any of this, it must be the first thing paid out in the budget. So let me stop here. I've gone on for long, and hand it over to questions.
Thank you, Rahul. Wow, so much wisdom. I'm really grateful. I'm going to have to watch this talk 3 more times and really internalize the narratives you have on the things we've learned slide. I think that would take our advocacy efforts ahead by a couple of years at least. So thank you so much for the work you're doing. So I did have some questions, so we'll do a little fireside chat and then open up to everyone else. Everyone else, you're welcome to still add questions to the Slido. Yeah, so let's begin. I really like your use of the terms loss opportunity. In my own research of cognitive psychology related to economics, there's research that shows that humans are loss averse, and we respond to loss averse type narratives more than opportunity narratives or utopia narratives, which is a bit challenging for me because I like to be an optimist and talk about a brighter future. But it seems we have to talk about loss, and then people will respond to that. You really developed these ideas. Can you talk a bit more of about your experience talking about loss? Like, have you seen it work? Like, where have you done it?
Yeah, we've tried very hard in Goa to sort of, in Goa, so we have two narratives, and it's sort of a Jekyll and Hyde kind of narrative. On one side, we've got the horrible things that mining causes, loss being one, environmental damage, the sort of the usual narrative of mining, which is the bad side of mining. It's bad, we have to do something about it. The good side is the five principles and, the better way to do it community. And in general, I've noticed that you get a 70-30 split, with 70% preferring the five principles kind of a narrative. There's a better way to do it in future. And 30% are, really like concerned about the loss. But both work. And I think you need to use both in conjunction. It should not be one or the other. India, I mean, the whole anti-corruption movement sort of flared up at times, and loss links into that whole anti-corruption kind of an issue. So in 2012 to 14, we had a big anti-corruption movement in India where a lot of this became very active. But today we can't make anybody, even think about this for a moment. So it comes and goes.
Okay. Well, just hearing you talk about it, I'm upset that Canadians have lost $24,000 each to private extraction. It just sounds so powerful. And yeah, I think we're gonna have to do whatever we can to spread this way of thinking. Another concept you mentioned many times: a normal profit, a reasonable profit. I feel like we're still in this overall narrative, this ideology that all profit is earned, and as some on this call know the term economic rents, a very confusing term to describe unearned profit. Could you explain again to the audience and for the future viewers, why do you see that there is a normal profit in mineral extraction, and why do we deserve the rest of it as the public?
Yeah, so the way I think one of the most important things is to think of how you would do this if you were the owner. So just so conceptually, suppose you owned one island in the middle of nowhere and you had the right to do whatever you wanted. What would you do? So, there's, let's say, a chunk of very valuable iron ore in the ground. So one thing is, let's say you suspect. So one thing is, you could say that, okay, let me do a deal with somebody, and they come and say, okay, I'll pay you 1% or whatever we extract, and so you could do something like that. So that's the way mining typically happens. You don't know what's in the ground, and somebody comes along and says, we'll share some money with you if we find something. Now, if you have a phone and I say that, will you buy my phone? And I don't tell you what kind of a phone it is, you'll like offer me very little. But if I tell you it's like one of the latest smartphones, you'll offer me, let's say, maybe $500. If I tell you it's the latest iPhone 15, brand new, $1,000. So there is value to knowledge. That's one part of it. But okay, now you know that there's minerals in the ground. Now, do you say that, the extractor, you come in and you extract, and then again, let's share the money? Or do you say that I'm going to employ you as a contractor, pay you per ton that you extract, and you give it to me, and I'll sell it in the market? Think of if you're selling your house. Does your real estate broker come and say, I'll buy the house and I'll sell it at whatever value? Or do you say, okay, you're just going to represent me in the transaction, but I'm going to get the value of the house? So the extractor, if you think of it yourself as owning the house or owning the mineral, the extractor is basically a service provider just helping you convert one to the other.
Hmm.
And it's up to you how you design it.
Yeah, that real estate agent landed. I think everyone can understand that. Like, why would you give your agent a large portion of your home value? So why should the mineral companies get a large portion of our mineral value? That's really good. So that actually leads into my next question: is how can you still incentivize a mining industry? For example, we have rare earth minerals we need for the electric car revolution. Like, how do you still incentivize that if much of the profit is taxed as commonwealth, and they only get a reasonable profit, as you say.
Yeah, so the reasonable profit is not sort of out of the head, out of my head. So in the oil and gas industry, for instance, oil companies expect or their target is to earn a minimum 10% return on equity on any project they do. And in the financial markets, there is an expected return on equity that a company is expected to generate. Of course, like the new economy is quite different, but a traditional company is expected to earn a certain return on the capital they invest. And that's a well understood principle. And so if you invest in the stock market, you would expect to get like maybe a couple of points beyond what you could get from saving it in debt. Right. So that is the normal expected return. And on the flip side, if there was an opportunity to extract minerals and you could get that, let's say that 10%, now that's a reasonable return. So forget the Exxons of the world. Why wouldn't any of us go into that business? You can get the reasonable return.
Well, someone's got to guarantee it, because there could be risk. You could not get 10%.
Yeah, it's not guaranteed, but including the risk, that is the expected return.
Okay.
I mean, so
thank you. Yeah.
Yeah, and it's in a way, if you look at the way we auction it, then the extractor has a right to decide how much he's going to bid for. His cost and profit comes into that.
Okay. So you also say that we must save the value for future generations, and it should be distributed as a citizen's dividend. Now, you touched upon this, but maybe we'll go a bit deeper. In Canada and elsewhere, a lot of the mainstream debate is between paying down the debt or public financing. So how would you argue why we should give people money versus pay down the debt with Mineral Commonwealth?
Yeah, so the answer here is you have to think about your money in sort of two buckets. One bucket, yeah. Okay, let me take it through into four buckets. So first, just think about let's say $10,000. If you win it in a lottery, you're going to blow it up in a party, right? So you'll save very little. Now, if you worked hard and you earned $10,000, you're going to save a certain amount, but you're going to spend most of it. Now, if you worked hard for many months and managed to save $10,000, you're not going to spend it very easily, but you may spend it on a car, on a house, or whatever it is, something you need. But now, if you inherited $10,000, that becomes more sacrosanct. You'll almost never spend it unless there's some crucial emergency. Now, what I'm trying to point out here is money that you earn or the debt you take on is your responsibility. What you inherit has to pass on. So in a sense, you need to put it into two different buckets, and that's what the public trust doctrine says. What is the mineral inheritance goes in its own track. You don't touch that. Yes, development is needed. And what does a province do which doesn't have any minerals? How do they develop? Yes, they take on debt, but they invest it in ways that debt can be repaid. And this is something that you just touched about land value tax, and Henry George is a great proponent of land value tax. There's an extension to that called the Henry George theorem by Stiglitz, who says that if you invest in infrastructure and do it properly, the increase in the value of the land around the infrastructure is enough to pay for that infrastructure. So if you take on debt and deal with that debt properly, invest that debt properly, that amount you should be able to raise taxes to pay for that debt. Just like any individual would also, you borrow money, you expect to earn something. Like a company who borrows money is not expecting to just, sell off its assets and repay that loan. You're expected to invest that, generate income, and repay that. So the same thing applies to the government. You should not be repaying debt by selling off your wealth. You need to do the hard work, generate income, and pay off your debt. You should not be taking from your children.
That's
Thank you,
a
Rahul.
good explanation. Thank you. So I'm really sorry I have a hard stop. I'm gonna ask one more question, and then I'll leave it to Ken we have a few more questions for the fireside, and then we have everyone else's questions. So this one really gets to the heart of how we even started and all this work. Dividends or guaranteed basic income, or like a negative income tax of sorts. You mentioned a lot about dividends. We all, but as you mentioned, Alberta, if you had a fund, would pay people $2,000 each, or maybe up to $4,000 each sustainably. But why not have a guaranteed basic income that pays those who need it most up to $24,000 a year sustainably from the same amount of funding source? I mean, I can see arguments there, equity arguments that those most impoverished, deserve their share of our Earth's values, because those who are doing really well are already getting a share of Earth's values, through the being in the tech industry or whatever high-paying jobs they have. And I'm not really strongly one way or another. I'm just sort of exploring emotionally this difference, and I seem to kind of go back and forth a lot about the dividends versus GBI when it comes to Commonwealth. I'm just curious, what's your take on it, and are you hard on one side or the other?
I prefer the dividend framing because for multiple reasons. One is, of course, that the word tax and welfare has been really sort of, especially in the US, has become a sort of a bad term, and it's very easy to frame a universal basic income as welfare because, in a sense, a lot of the discussion is about doing away with welfare, because people need, but it's still sort of a lot of the communication is a substitute to welfare. But if you think about why we want to pay somebody a universal basic income or provide universal basic services, when you think about the deep rationale for it, it basically stems from the idea that we're all humans, and as a birthright, just by being born on the planet, we have an equal right to it. And as such, as an equal right, we have an equal right to sort of the income from the planet, and therefore a right to life and the basic level of living, the basic standard of living. After that basic standard of living has been established for everybody, only then is it fair for somebody to have private property or to have private jets and do all these other kind of things. So the fundamental rationale comes back to the fact that we are actually equal inheritors of the planet or the province or the nation or whatever, as an equal birthright, and a right to therefore universal basic income or universal basic services or any kind of human right comes from that sense of equality. So if we frame the whole thing as a right coming from that, the dividend framing flows much better. If
Okay, got it. Thank you. So with that, I have to go. Thank you, everyone. And we have more questions for you, Rahul, if you're willing to stay. And
sure, I can say
usually we tell everyone the meeting is officially over, but we're going to continue with questions. So you're welcome to stay as long as everyone has the energy for it. So Ken, I'm handing it off to you. Thank you so much. Okay, bye-bye.
Thank you, Floyd. And thank you so much for that, Rahul. Yeah. And I just want to bring up maybe a few more points to discuss, and then we'll go to audience Q&A. And first is I'd like to give a shout out to all of the basic income supporters that are here with us today, followers of UBI Works. The conversation in Canada around basic income has really focused on guaranteed basic income as an anti-poverty social assistance measure funded in myriad ways. But many leading champions and advocates of basic income from the early days of Thomas Paine and even today's champions like Guy Standing, Carl Widerquist, have long called for basic income as a dividend from the commons. And so I think Rahul's talk about minerals as a commons that can pay common dividends is especially important Of course, we still need to continue pushing towards guaranteed basic income as a social program, but the conversation around the future we need and minerals inheritance is complementary and necessarily something we need to continue to build a conversation around. And what strikes me, Rahul, is that these ideas are not limited to the minerals that are beneath our feet. And in fact, I think this, if we were just to put on our future looking hat and think about the future of, like, for example, industries like space mining, these ideas will actually become more relevant. There's an recent article from CBC that says that space mining is almost here and it's a future industry that we could own as Canadians. And NASA recently launched a mission towards an asteroid that could be worth $10,000 quadrillion US, right? And so I know this seems very far off, but it's something interesting to think about, right? How can we explain or understand that most of this profit from these asteroids will be worth, or should be common wealth, when the private company took all the risk and investment to get there, right? So the 5 principles that you laid out are extremely important for us here, but as we go into the future, these are going to continue to apply, but in larger scopes of planetary or even interplanetary co-ownership. So I'm wondering if you thought about this at all.
Yeah. So this actually goes back to Locke and sort of Paine, the debate back at the beginning of founding of the US, and even earlier concepts of like Australia being uninhabited, terra nullius, so anybody can go and claim anything they want. Locke, of course, did a lot of damage, and the same Lockean ideas are continuing, that the first person to go somewhere and do something becomes the owner because they mix their labor into the soil. So in that same way, some Jeff Bezos has gone and captured this quadrillion-dollar asteroid, so they have the right to it. But the question is, like, how did that right arise? I mean, who gave them the right to go and like pick up an asteroid and take it away basically from everybody else now and in the future? I mean, where did this right actually come from? And there's one example somebody gave. Think of the world like when it was completely like without private property, and this first person came and, let's say, fenced a pond. So basically what happened is, when that person fenced the pond, his private wealth increased by the value of the pond. But clearly the value of the planet has not changed. So the wealth of everybody else has reduced by the value of that pond. And what is the compensation? And how did this person get the right to fence off that pond? So this is a very deep philosophical issue, but it is a very important issue which underlies a lot of this, like what's going on with deep sea mining and the asteroids. And in fact, fundamentally, the way the US principally is the way it looks at this is that first come, first serve. Anybody can go out and do whatever they feel like. It goes back to those philosophical ideas, but if we have to make this work better from everybody's point of view, we have to stop this.
Yeah. And so I think that this conversation is going to become more relevant over time with more classes of Commonwealth as well. So now we'll go to audience Q&A. Thanks to the few of you who've asked a question and helped vote on them. And the top one right here by Anonymous here. It's next time you add a question, you can type your name too. The moods and minds of Canadians are so engaged with survival, far from being able to consider these creative ideas. How do we address this first?
Hard for me to make suggestions, I've been only once to Canada for a few hours to Toronto, but so I really don't know how you would do it, but maybe some of you could, like, since we're post the session, I don't know if anybody else has creative ideas of how you could do this.
Yeah, and I think actually this is an important question as well, because one of the things, Rahul, you brought up was that these staggering statistics that you showed with StatCan data on the loss rates, people should be outraged, but very few people are up in arms about this. And as this person mentioned, so many people are just paycheck to paycheck. And I wonder if it's, this is one of the issues that we could collectively try and put our hearts and minds together, try and solve these bigger picture issues if we could meet people's basic needs first with a program like a basic income.
Yeah, no, a program like basic income, one of its benefits is it does give you more time to do things with it, and including protest. But think about think about other strategies also, not just a sort of bottoms-up strategy. This structure can get benefit from a wide variety of people, especially in the business elite and things like that. Like, for instance, there are any number of studies I've seen on Alberta. In fact, Reagan is out there. He did a study in 2010, is out here. He did a study showing big losses in Alberta. There have been 2 royalty reviews, a couple of other studies. So people, I mean, at the academic and the bureaucratic level, people know that there are losses. It's not being framed as a loss. In most cases, it's being framed as we're not getting as much of a resource rent as we should. But people know it. People know that you should be saving more. There have been suggestions around dividends, but I'm not sure grassroots mass movement may be the way to go. You may find it easier through advocacy, especially at some sort of an elite kind of a level. Think tanks and stuff like that to say that this is just a better way. But you may need to find sort of a charismatic politician willing to take this issue up. We know in Alaska it was Jay Hammond, it was Peter Lafitte. I don't know if he's got in Alberta. So you have to pick and see where you can get it done. It may be that you find a far-thinking leader of a First Nation who makes this demand, saying that national government or provincial government, you hold these minerals in trust for us as the First Nations. We as the First Nations want this to be done. There are many ways you might.
And so I think that's a really good point, that the channel of advocacy might be slightly different than, for example, calling for a basic income or advocacy towards affordable housing, which are more nearer to the average voter and the average advocate of what they can do to call their MP or their provincial representative to push for basic income. So these ideas around minerals as a commonwealth and sovereign wealth funds, I think, can be advocated in parallel, but it's slightly different movement than calling for, we need to continue pushing for basic income and affordable housing. Now, the next question: in a situation where the provinces and federal government rarely coordinate on policy, where in Canada would you advise we focus our efforts to implement a sovereign wealth fund? I think this is a fantastic question. As some of you may know, in Canada, natural resources are the jurisdiction of provinces. And so right now, there are already several territorial and provincial sovereign wealth funds that do invest resource revenues. But there's good evidence that the loss rates are very high, even where there are sovereign wealth funds. And so, Rahul, I'm wondering if you have any thoughts on this.
No, again, like, where to begin with in Canada? I really don't know what would be a good starting point. But
Yeah,
I have a sense that it may be good. I mean, local knowledge, but I have a suspicion you might find the First Nation easier because it's a smaller group.
Mm-hmm.
I
Yeah,
mean, just
I want to give
show the model, advocate for the model.
Absolutely. Yeah, and thanks to several of you in the chats that have been talking about Alberta and other ideas around oil and gas revenues. Regan, Richard, Serena. In Canada, there are several sovereign wealth funds that we've written about in our fund article. In Alberta, there's the Heritage Fund. The Quebec's Generation Fund invests the hydro revenues. They also use revenues from alcohol tax. In Newfoundland, there was a Newfoundland Futures Fund that was launched in 2022 to invest their offshore oil and gas revenues. And there's several smaller ones. There's a Northwest Territories Heritage Fund, and there's also a First Nations Sovereign Wealth Fund in Ontario as well. But several prominent proposals in Saskatchewan to set up a heritage fund to invest their oil and gas, but no serious ones for BC or Ontario at the moment. And as you said, Rahul, we could have had $1 trillion invested into a fund from the Ring of Fire in Ontario, but that was lost and will never come back. So the answer to that question is, I think a lot of that energy needs to be directed at the provincial level. There is a proposal for a national sovereign wealth fund network that was actually written about by a former managing director of the Canada Pension Fund, Canada Pension Plan Investments Board, for a model where we could have a group of provincial sovereign wealth funds grouped under one umbrella to share costs and investment expertise. And this is a feasible model, but where the provinces still manage their separate pools of capital. And this is something that we've written about in our fund article, and we're creating videos about. So we'll definitely keep an eye on that. The next question is, considering the principles discussed and that many jurisdictions allocate resources to the landowner, how can the legal obstacles be addressed?
Yeah, in where it belongs to the landowner, it is harder. I mean, I know in Alberta there's a freehold mineral tax, you can get a bit of it back, but at the end, the landowner is the owner of the mineral, or the mineral rights may belong to a private entity. So I'm not sure there it would be fair or reasonable to say now the province has to get the whole value of the mineral because it has been passed on to somebody else. But yeah, so I'm not sure in those situations. I mean, to me, it would not sound fair. But in theory, you could sort of say that, okay, we're changing land rights entirely and recapturing that value. But that's going to be, in my mind, a much, much harder sell than anything.
Yeah, and so part of the work to be done is in changing hearts and minds and recognizing these as co-ownership. So we'll move on to the next question. Canada is having such a fuss about climate action incentive / carbon tax. What are the ways to focus or control the narrative? And I think this is a particularly contentious but important topic of debate today in Canada around carbon dividends and carbon rebates. Yeah, I'm wondering if you have any thoughts on that. And certainly in Canada right now, it's a very polarizing topic. And what comes to mind is that in the States, it's actually not as polarizing. In fact, a much more bipartisan effort to bring about carbon dividends or a cap and dividend model. And I'm wondering if this is something that you thought about.
Yeah, no, I'm not familiar with the debate in Canada. So I know that you all have a dividend, right? Across you have a charge and you have a dividend, at least in some provinces. And from what I remember, people don't connect the two. Is that true?
Yeah, there's a federal carbon backstop, and several provinces have their own carbon rebate program as well. For example, in BC, they recycle a large part of that, the carbon tax revenue through tax rebates and the like. But for much of Canada, the majority of carbon pricing revenues are distributed back as a rebate. And what's really interesting is that in the States, there's a big push for carbon dividends, both from Democrats and from Republicans as well. In fact, I recently found out a 2019 open letter, the so-called, they call it the largest statement ever in the history of economics. And it was signed by over 4,000 economists, including many Nobel laureates and former chairs of the Federal Reserve, Larry Summers, Janet Yellen, calling for carbon dividends. And this initiative was actually initiated by former Republicans. So you can already see that the conversation is very different in the States than in Canada, where it's really largely been polarized. So I think on the question of how to focus or control the narrative, one of the things we've been doing at Commonwealth and also at UBI Works is really amplifying the conversation around carbon dividends as a rebate from charging for something that belongs to everybody, right? As Peter Barnes likes to say, who owns the sky? Well, if anybody owns the sky, it's all of us together. And this shouldn't be a politically polarizing thing. And there's also research that suggests that if we don't rebate this money back to households, the carbon taxes can be extremely aggressive. But if we do pay it out in universal payments, then it can be progressive. And this is exactly what we've seen from research by Clean Prosperity organization in Canada, who helped bring about the carbon tax and rebate in Canada. So we'll move on to the next question. Thank you for that. The next point, in answer to the question, dividends ought to be the priority, as well as saving for future generations in the sovereign fund. Which debt? National? And then I assume the same person writes, much of that debt is illegitimate, meaning it often stems from corporate bailouts to the biggest companies, banks, etc. Often those are foreign companies. So the Quebec's Generations Fund invests hydroelectric revenues with the express mandate of paying down the province's debt. There have been prominent proposals in Saskatchewan to set up a Saskatchewan Heritage Fund to save and invest the province's minerals and oil and gas revenues, including from a former president of the University of Saskatchewan, actually proposing this. And interestingly enough, the Canadians Taxpayers Federation actually came up with a proposal several years ago advocating for a Saskatchewan sovereign wealth fund. And in these two proposals for Saskatchewan, they call for using the revenues first to pay down the province's debt, and then, or using the revenues to pay down the debt, and then some excess above, I believe, $1.5 billion a year, then goes into a fund. So they've actually advocated for a priority of spending here to pay down the debt first, which might, maybe the math works out that that's the most economically beneficial to do that, and then later on to distribute dividends. And so one answer would be, well, because natural resource revenues would be provincial jurisdiction, it would be provincial debt. And I believe that is part of that's a priority for Newfoundland as well. Yeah.
Yeah.
And then final point here, interesting question, why resource extractors bid value resources? Have you explored the financial dimension of resources as collateral for private lending? This is an interesting question.
Yeah, no, to be honest, no, I know about the idea of resources as collateral, but I mean, who would lend to somebody who's agreed to buy something worth 100 for 110 or 106? I mean, it would seem like a little bit absurd. So, no, it is a very strange situation that, in effect, really, it's basically an uneconomic bid, but just the way government works now, this company has bid it in a fair auction. So, and the companies are also like, they bid these amounts. I'm not sure where this is going to end up. But it makes no economic sense, because they can just like stand outside the extractor's gate and buy the 100, the mineral worth 100 from them. But they're paying 106 to the government. So
Yeah, I think it's an interesting question, but I can't see it as being more higher priority or more salient than putting into fund, balance budgets or pay out dividends. Those seem like easier ideas to grasp for the average policymaker and voter. There's a question in the chat here from Richard Denton. Can you talk about Prime Minister Modi's 10% on companies going to charity as another strategy?
So in India, there are a couple of things which are connected to sort of mining. So one is, there's a general rule that companies have to pay, I think, some 2% of their profits, or spend 2% of their profits as CSR. But even that CSR is a very limited kind of a thing, and then there's a default. Otherwise, if you can't spend it in this sort of defined set of things, then you give it into the Prime Minister Relief Fund, which basically then the Prime Minister will put his face on everything that it's spent on. So that's one, and it's frankly, I mean, from the point of view of the local community, it's just like, it's like quite irrelevant, because the amounts are quite small. There's a separate thing which is called the District Mineral Foundation, which is it's basically about 1.5% of the mineral value has to go to the, okay, so the district is one level. So in Goa has two districts. It's a division below the state. So I don't know what the division below the province is in Canada, but sort of it's the equivalent of that. So so this 1.5 to 3% of the mineral value is collected as a separate amount and goes to the District Mineral Foundation, and that's meant to be spent for mining affected area and people, with a couple of restrictions. One is, it cannot be used for things which is part of the general government budget. If the government is supposed to build a road, that is supposed to come separately. It is also not allowed to be used for polluter pay things. So the mine has created some nuisance. You can't take money from this and rectify it. It's not, so then what's turned out is like pretty large amounts have been collected, but the local population have not been able to, in most parts of the country, actually almost everywhere, have been able to come up with ways that they want this money to be spent, because they're not in the, that kind of frame of mind. They say, okay, build me a school, or, give me water supply, that kind of stuff. But the amounts are very large. So in some places, they're building airports and international hockey stadiums and all kinds of wasteful things. So that's also not worked very well. But if you compare these amounts to the loss, it's a complete, orders of magnitude. And the way I think of it is that, the government and the extractors are basically giving the local population lollipops, to stay quiet while the great wealth is being stolen.
Wow. I love the very vivid metaphors that you've given today. And I think that's actually a good way to close today's call. Thank you so much to everybody who stayed with us all the way to the end of this. And this is recorded. And as Floyd mentioned before, got to watch this several times more to really internalize and sit with these narratives. And Rahul, I want to thank you so much for giving us your time. It must be pretty late there by now. But
thanks, Ken, and thanks UBI Works and Commonwealth Canada, and all of you who have stuck till the end. So
thank you very much.
It was good.
And
I hope something happens in Canada.
Thank you. And we're excited to continue sharing and amplifying these ideas, and to get more Canadians and people around the world talking about these very important topics. So thank you, and have a good day, everybody.
Bye.